Brand new. Motorcycles are sitting on dealer floors, collecting dust. Some owners are underwater by $3,000 before their first oil change. The idea that a name brand bike holds its value came from a decade that no longer exists. I almost made the same mistake. A dealership owner I have known for 15 years showed me his wholesale auction data. The brand most riders trust is stacking more unsold inventory than anything else on this list. I will name it at the end. Today, I am uncovering the 10 motorcycles dealers cannot move off their floors. Most riders still think the Hayabusa sells itself. That reputation was built in 1999 when this bike was the fastest production motorcycle on the planet. That was 26 years ago. The current Hayabusa starts at $19,099, MSRP. For that price, you are getting a motorcycle designed for triple-digit highway pulls that most owners never make. Dealers I talk to say the same thing. The Hayabusa sits. It is a showroom trophy that riders come in to look at, take a photo with, and walk past on the way to a Ninja or an MT-09 that costs $8,000 to $10,000 less. Here is the part nobody talks about. The moment you ride it off the lot, a Hayabusa loses $3,500 to $5,000 in the first year. That is not a depreciation curve. That is a cliff. And if you are financing at today's rates of 9% to 14%, you are underwater before your first payment clears. You save that $3,500 just by knowing this bike is not the 1999 legend anymore. It is 2026 inventory sitting on a floor plan. The next motorcycle on this list is not sitting on dealer floors because it is overpriced. It is sitting there because its own parent company gave up on it. That abandonment is already costing current owners $4,200 to $6,000 in lost resale. Number 9. BMW R18. A lot of riders assumed BMW's entry into the heavyweight cruiser market meant the R18 would hold value like a GS. That assumption came from BMW's adventure bike reputation, where the R1250 GS and GS Adventure dominate resale charts globally. The R18 is not a GS. A dealer in Texas told me he had a customer trade in a 2021 R18 with 6,200 miles. The owner paid $18,340 after fees. The dealer offered $11,800. That is a $6,500 loss in 3 years on a bike that barely left the garage. But here is the catch. The R18 was BMW's attempt to take Harley customers. Those customers went back to Harley or went to Indian. The riders who stayed with BMW went back to the GS. The R18 ended up appealing to almost nobody, and the resale market reflects it. At some dealers, 2024 R18 models are still sitting alongside 2025 stock. You avoid that $6,500 depreciation hit by understanding a simple principle. A brand being excellent in one category does not guarantee it will hold value in another. And this is where most riders get it wrong. The next bike on this list comes from a racing brand that should have no trouble moving units. The problem is not the brand, it is a gap between what the factory can ship and what buyers will accept. That gap is costing dealers $3,800 to $5,500 per unit in forced markdowns. Number 8. Ducati Scrambler. Everyone assumes Ducati sells every bike it builds. In 2025, Ducati delivered 50,985 motorcycles globally. That is a 7% decline year over year, their first significant drop in half a decade. The Scrambler family recorded just 5,814 units worldwide. The Scrambler's problem is specific. When Euro 5 plus emission standards hit, Ducati had to pull several models for retooling. The Monster, the Hypermotard, and the Desert X all went temporarily unavailable. That left Scrambler inventory from the previous production run sitting at dealers, with no new models to generate showroom traffic around them. A 2024 Scrambler 800 that listed at $11,295 is now moving at $7,800 to $8,900 at dealers trying to clear space for 2026 stock. That is a $2,400 to $3,500 discount on a bike that is mechanically identical to what Ducati will ship next quarter. If you want a Scrambler, that gap is your advantage, but you need to move before the 2026 models arrive and the clearance window closes. The contradiction on the next entry is harder to explain. This is a 127-year-old American brand that just got sold off by its parent company for the second time in a decade. The owners who bought in during the good years are now losing $4,200 to $6,000 trying to get out. Number 7. Indian Chief and Springfield. Most riders assumed Polaris would keep building Indian forever. Indian Motorcycle was the brand Polaris revived in 2011 to challenge Harley directly. Global sales peaked above 30,000 units in 2021. By 2025, that number had fallen to 24,421, 4 consecutive years of decline. Then Polaris did what Polaris does. In October 2025, the company sold Indian Motorcycle to a private equity firm called Carrollwood LP. That is the same company that shut down Victory in 2017. 2 motorcycle brands abandoned in 8 years. Here is what that means for anyone holding an Indian Chief or Springfield. The used market does not price in hope. It prices in uncertainty. Indian Chief models that traded at $14,000 to $16,000 in 2023 are now listed at $9,500 to $11,800. Buyers are afraid of parts access, warranty support, and long-term service infrastructure. You save $4,200 to $6,000 by not buying into that uncertainty right now. Let the new ownership stabilize. If they invest, prices recover. If they do not, you avoided a brand that may not have a dealer network in 3 years. The next entry is not a motorcycle that sits on dealer floors. It is a motorcycle that barely exists on dealer floors. And somehow, it still managed to lose $75 million in a single year. We are not at number 1 yet, and that one is worth staying for. The brand most riders trust is stacking more unsold inventory than anything else on this list. But what you have already seen across these first entries is putting $4,200 to $6,500 of protection in your hands, just by knowing which showrooms to walk past. Number 6. Livewire. Nobody openly says electric motorcycles have failed. The manufacturers will not say it. The dealers will not say it. But the SEC filings say it clearly. Livewire, Harley-Davidson's electric spin-off, sold 33 motorcycles in the first quarter of 2025. Not 3,333. The company posted a $20 million operating loss on those 33 units. Run the math. That is roughly $606,000 in losses for every bike that left a showroom. For the full year of 2025, Livewire moved 653 electric motorcycles globally and lost $75 million doing it. The flagship Livewire 1 has been discounted from $21,999 in 2021 to $16,499 today, and it still does not sell. Here is what surprised even me. Livewire's own CEO has not committed to funding the brand beyond its existing loan agreement. You now know what every dealer already knows. The electric motorcycle segment is not a market. It is a write-off. And anyone who bought a Livewire at launch is holding a $22,000 receipt on a bike now worth $8,000 to $10,000 at best. The next brand on this list did not just fail to sell motorcycles. It built 265,000 of them that nobody wanted, and it nearly collapsed an entire company. The storage costs alone ran $457 million. Number 5, KTM 1290 and 1390. Super Adventure. KTM built 265,000 motorcycles that nobody bought. That number was revealed during the company's insolvency hearings in late 2024. It is roughly equal to an entire year of global sales for the brand. The storage and financing costs for that inventory reached $457 million between January 2023 and October 2024. KTM entered self-administration, which is the European equivalent of Chapter 11. Production stopped at the Panicking plant in Austria. The chief executive officer resigned in January 2025. Hundreds of employees were laid off. The MotoGP development program was paused. For owners of the 1290 and 1390 Super Adventure models, this created a specific problem. Parts availability became uncertain. Dealers did not know what their allocations would be for 2026. KTM announced 70% fewer off-road production units for the 2026 model year. Resale values on used KTM adventure bikes dropped 15% to 22% in under 6 months. If you were planning to buy a KTM adventure bike, waiting saved you $2,500 to $5,800 on the used market alone. And if you are holding one, the time to sell was before the insolvency news broke. That window is closed. The next motorcycle costs more than some cars. It weighs more than some cars. And it is losing value faster than almost anything else in the touring segment. That loss runs from $7,200 to $9,500 over a typical 3-year ownership window. Everything in the first half adds up to over $28,000 in combined exposure. These bikes can put on your finances. What is coming in the second half is where the numbers get harder to believe. That is why you are hearing them here instead of anywhere else. Number 4. Triumph Rocket 3. Riders who buy a Triumph Rocket 3 buy it because of one number, 2,458 cubic centimeters. It is the largest production motorcycle engine on the market. That is the selling point. That is also the problem. The Rocket 3 starts at $24,800 for the R model and $25,700 for the GT. At that price, you are competing directly with Harley touring bikes that have a century of brand infrastructure behind them, and Indian baggers with better resale floors. The Rocket 3 has neither. A 2022 Rocket 3 GT that sold at $26,500 out the door is now trading for $16,500 to $18,000 on the used market. Tire replacement alone runs $600 to $800 because the rear is 240 millimeters, and that limits your options. Routine service at a Triumph dealer runs $450 to $700 per visit because of the engine's complexity. This is a motorcycle that costs premium money to own and returns economy money when you sell. You avoid that loss of $7,200 to $9,500 by recognizing that the biggest engine does not mean the best investment. It means the biggest carrying cost. The next bike on this list shares a problem with the Rocket 3, but at a higher price point and with a buyer demographic that is aging out of the market. The annual cost of ownership runs $8,400 to $11,200 when you factor in depreciation and insurance. Number 3. Honda Goldwing. A retired postal worker in Arizona told me he bought a 2022 Goldwing Tour DCT for $32,800 with delivery. He rode it for 2 seasons and put on 11,000 miles. When he tried to sell it in early 2025, the best offer he received was $22,500. That is a $10,300 loss on a motorcycle he maintained by the book. The Goldwing has a buyer problem. Its core demographic is males aged 55 to 70. That demographic is shrinking every year. Younger touring riders are choosing adventure bikes like the BMW R18 GS or the Harley Pan America at lower price points with better resale. The Goldwing starts at $28,700 for the base model and climbs past $34,000 for the Tour DCT. Insurance on a Goldwing runs $1,200 to $1,800 annually for a rider over 50. Nobody inside Honda will tell you the Goldwing's target market is disappearing, but the resale data tells you everything. You now have the same information that fleet liquidators use when they price touring bikes at auction. The Goldwing is a depreciating asset, disguised as a luxury purchase. The next motorcycle is the beginning of the biggest story on this list. It is one specific model from one specific brand, and the number attached to it is $12,500 in combined losses over a standard ownership window. Number 2. Harley-Davidson Road King. Most Harley owners believe the Road King holds its value because it always has. That belief comes from a decade of pandemic-era pricing when supply was tight and used. Harleys sold for near-manufacturer suggested retail price figures. That decade is over. Harley-Davidson reported a 12% drop in consumer motorcycle sales for 2025. Total units fell to 132,500. That is 32% below 2021 levels. But the Road King got hit harder than the touring lineup average because it sits in a pricing dead zone. It costs $21,999 to $23,399 new, which is too close to the Street Glide at $24,499 for most buyers to choose the Road King over it. Here is what surprised even me. Dealers are now stacking Road King inventory next to leftover 2024 models that were already marked down once. A 2023 Road King with 8,000 miles is moving at $14,500 to $16,000. That is a $5,500 to $7,500 loss from what the original buyer paid. Add financing costs and insurance, and you are looking at $12,500 in total exposure over 3 years. The window to sell a Road King at fair value is closing fast. If you own one and have been thinking about trading, the longer you wait, the more inventory piles up ahead of you. We are down to the final entry. The brand most riders trust is stacking more unsold inventory than anything else on this list. This almost never appears in buying guides. Not because it is unknown, because the people who know have no incentive to share it. Until now. Number 1. Harley-Davidson. The brand most riders trust is stacking more unsold inventory than anything else on this list. And now I can name it. Harley-Davidson has approximately 80,000 new motorcycles sitting unsold across American dealerships. They are in showrooms, backlots, overflow storage, and regional warehouses. In the first quarter of 2024 alone, dealer inventory stood at 68,900 units. By the first quarter of 2025, it had fallen to 55,700. By the first quarter of 2026, after aggressive shipment cuts, it reached 43,700. But those numbers represent only current year stock on hand. They do not include the 2023 and 2024 models still occupying floor space at dealers who bought them 18 months ago. Here is the false belief that makes this number devastating. Riders believe Harley-Davidson is an American institution that will always hold value because demand never dies. That belief was built on a generation of baby boomer riders who bought Harleys as identity purchases and held them regardless of cost. That generation is aging out. The average Harley buyer is now over 50. Gen Z and millennial riders are not replacing them at anywhere near the same rate. Dealers are paying 8% to 10% interest on floor plan loans for every unsold bike. An $18,000 motorcycle sitting for a year generates $1,500 in interest alone. A dealer holding 300 bikes is paying roughly $450,000 a year just in financing before a single customer walks through the door. Since August 2025, 73 Harley dealerships have closed across the United States and Canada. Remember the retired postal worker from Arizona? His Gold Wing lost $10,300 in 2 seasons. But his neighbor, a fleet maintenance supervisor I spoke with 6 months ago, bought a 2023 Harley-Davidson Street Glide at $27,800 and was offered $19,200 on a trade-in this spring. An $8,600 loss on the brand most riders trust. When I told him the dealer inventory numbers, he did not believe me. He checked, then he sold. Harley-Davidson's own first quarter of 2026 earnings report shows revenue declining again, with net income dropping from $133 million to $24.8 million year over year. The company's new strategy is called Back to the Bricks. It focuses on reducing inventory, strengthening dealer margins, and rebuilding foot traffic. Whether it works is an open question. What is not an open question is that right now, if you are buying or holding a Harley, you are sitting on the wrong side of the largest dealer inventory correction in the brand's history. That $80,000 motorcycle collection in your garage, it is worth $55,000 to $62,000 today. And the floor is not in yet. You just learned what dealer sales managers, wholesale auction buyers, and fleet liquidators already know. You are no longer on the outside of this market. You are on the inside. Here is what that means in specific terms. You know the Hayabusa is a $3,500 depreciation trap. You know the R18 is a $6,500 mistake in a segment BMW abandoned. You know the Scrambler has a clearance window worth $3,500 if you move fast. You know Indian is a brand in ownership limbo. You know Livewire is a $75 million write-off. You know KTM is shipping 70% fewer bikes after a $457 million inventory disaster. You know the Rocket 3, the Gold Wing, and the Road King are all losing value faster than their owners realize. And you know Harley-Davidson is sitting on 80,000 unsold motorcycles while 73 dealerships close around them. If someone you know is about to walk into a dealership this weekend, send them this video. It is the cheapest insurance they will ever get. If you want to know what else the market is hiding, subscribe, because this is the only place these conversations happen.